Welcome to Purpose-Driven Passive Profits. Today, we get to talk about the new zero-down mortgage making a comeback and how it's going to affect the housing market and investments you might be considering right now. Holy cow! Did we not learn our lesson? Who remembers back in 2006, 2005 really is when it started to come out, when they were handing out loans to anybody and everybody, zero down. Sign right here, no credit check required, no income verification. You just come sign and we'll give you a loan. Anybody remember those days? I do. They were handing out loans left and right. And then guess what happened shortly after that? Then there's the zero down. And then eventually we had a crash, a big one. Holy cow, I don't know how they actually are going to allow this, but this is the way it's going to work. They have proposed that basically, the lender will give 97% of the money. So they can get 97% first mortgage. And then they'll provide a second mortgage for the 3%. The reason that they had the 3% down payment, that's how much the original borrower or the buyer had to pay. The reason they had the 3% was to show skin in the game, to show commitment to the actual asset. What do you think happens when they have a whole bunch of zero down loans? Statistically, those are the most risky loans. The less down payment, the more likely it is to go bust. That's why, like right now, we work with thousands of people, thousands of investors who they trust their money with us on projects. But I'll tell you what, they trust us so much more when I put my personal money into it, or when my partner Steve puts his money into it. They trust us immensely more because they know that we have what you would call the proverbial skin in the game. We are vested. We are not going to walk away because we put our money into it. All the deals that we pump out and promote to our investor pool here at Home Invest, we drew a line at some point in the past where I said everything from this date forward, we put money into. We're not going to take the deal. We're not going to do the deal unless we have money into it. And we have stuck with that ever since then. And it's why investors keep coming back to us. I think it's a big reason anyways. Our performance obviously is a big part of it, but the fact that we have skin in the game, investment capital in the deal alongside of our investors. The same thing needs to happen when someone's buying their personal house. The same thing has to happen. You can't let somebody do this 0% down thing. It's just going to end badly for the lenders. And I'm bringing this out and calling it out to our community here because I'm worried. I'm worried that we're at the top. We're at the peak right now. And everything else that we do from this point forward, everything else that we do, it's going to end up biting us in the rear end down the road. I don't know when. I can't tell you. I don't have a crystal ball. I can't say this is going to happen on July 5th, 2025. I don't have that crystal ball, and no one does. But the reality is, if you look at like where the market is today, and I'll do a share screen for anyone that can visually see this. If you can't visually see it, maybe you'll have to come back and check it out on a visual platform. But I'll describe it verbally. Over the last 50 years, prices have gone up a lot in real estate, tremendously a lot since they started printing money during COVID and all these government packages that they did. But we're seeing it slip already. Like if you go to the very top of the graph right now, we're seeing a slip. It's come down a little bit. It's come down a little bit. I know you might not see it in your backyard yet, but it's come down a little bit, and it's coming down in more and more cities across the country right now. So all that we're going to do is maybe temporarily prop up the end of this cycle. And then what's going to happen? Then we start to see the fallout. So I feel bad for anybody that takes these zero down loans right now. I think I'll just nicely say this as nice as I could. If you were my brother, if you were my cousin, if you were a friend, if you're a fellow investor, I would say, don't be dumb. Look around. Like, does a roller coaster, does it just go up forever or does it eventually come down? Real estate's a very cyclical thing. I think in the long run, yeah. Here's my exception, okay? We're talking single family, by the way. We're not talking multifamily. Multifamily is totally different. Multifamily is the best asset class you can be in right now, in my opinion. Multifamily and manufacturing. Those two asset classes are the best in the world right now. But for single family, because the government can't meddle in them as much, they have way less control. In the single family housing market, the government controls that market. They provide most of the financing liquidity, most of the loans, Fannie Mae, Freddie Mac, between those two giants, most money comes from them in the housing market. So single family housing is what we're talking about right now. That's what's at risk. Multifamily is not at risk, not at all. But we all know right now that the market is at an all-time high in most cities, most states right now for single family houses. And at a certain point, if the economy breaks, which a lot of people are forecasting that it will, then those prices, if unemployment rates go up, those prices got to come down. So I feel bad for anybody that's getting lured into buying a single family right now at the very peak of the market, unless you negotiate some sweetheart deal, seller financed. Like we just got an $8 million building seller financed to us at 4% interest rate. Like if you do negotiate a sweetheart deal like that, okay, great, buy it. Makes sense. I'm with you. I'll support you. But anything outside of that, I really feel bad. I think that you're going to regret it on the backside. Instead, put that money to work for you in a solid investment. Gold, silver, something that's tangible that can't be printed by the government, or a beautiful piece of multifamily real estate that's bringing in cash flow every single month. That's what I'd look at instead of buying a house right now. Okay, that concludes this episode. Hey, if you got an ounce of value from this, I would really appreciate if you could take a second to leave us a review. It's free for you and it means the world to us. Take a second, whatever platform you're catching us on, just stop for a second and leave us a quick review. We try to keep these podcasts short, sweet, so that you can get the nice bites that you need while the headlines are coming through. But go ahead, leave us a quick review. Thank you very much. God bless. Hi, accredited investors. Hey, I'm so excited. We got a new deal right now. It's a 46-unit building, brick, solid brick, in the racehorse capital of the world, Lexington, Kentucky. Rents on this thing, they're 15% below what the market rate is around it. I know because we own several buildings in the area. We're buying this one 15% less. To learn more, all you have to do is go to homeinvest.com or click on the description down below. Inside the description, you'll see a link down there. Remember, always consult with a tax advisor, a financial planner, or attorney before making any investment decisions. Having said all that, all you have to do is go to homeinvest.com or click on the link that you'll find down in the description down below. Thanks, God bless. Enjoy the show.